This is Deborah Johnson for Women at Halftime, and I'm passionate about helping women use their untapped skills, resources, and talents to create their ideal work and lifestyle, making a difference in their second half. Well, I'd love to welcome today, I've got Tatiana Tsoir here with 5 critical financial principles you need to address at halftime. And I'm so excited that you are here today. We're going to have a great time. Before we get started, we do have a free webinar that you can sign up for, How to Work Remotely Through Any Economy. This is a very, very relevant topic right now because people are made to work remotely. So, but I have chosen to do that. So just have some really good tips for you, how to work remotely through any economy. You can get to that with goalsforyourlife.com/free webinar. So again, that is goalsforyourlife.com/free webinar. Make sure you do that, free webinar. So, okay, so let's just get right to this. Tatiana, I love your name, by the way. That is so beautiful. You know, you need to tell me where you were originally from first.
I'm originally from Belarus.
Okay. All right. So it's just a beautiful name. And
thank you.
I used that name in one of my musicals too. It was a Russian musical. So I was wondering if you were from that area too. So, but I love that. So we're going to have a good time today. So, and I mean, you have some great little credits here because you are a CPA. You're a numbers expert. I love this, numbers expert with over 15 years of experience helping entrepreneurs and business owners become the boss of their bottom line. That is a great branding statement right there. And we're going to talk about that in a moment. So, but first of all, you say that halftime or midlife is the best time to start a business. And tell me, why do you feel that way?
It's usually the best time to start a business because as a woman, your kids are kind of grown up. I mean, even if they're not out of the house, they're most likely teenagers or independent enough so that you can actually have some of your own time and actually can have the time and the ability to pursue what you really like. Also, you typically have the time to learn, you have the time to invest in yourself, find your own personal equilibrium, and just kind of go all in, which people before that, when the kids are little and they're building a career, they really can't do that often. So I think that halftime is a great time to start a business because you can give it all you've got and get really great results doing it.
Yes. Oh, I fully agree with you right there. And it's really fun to interview those who feel the same. And actually, there are many studies out with, some of those statistics that these, your mind is very sharp during this time. People feel like it's starting to go the other way, but it is not. And I tell you, I've raised 3 sons, and when you get those active boys, that's when you really feel like your mind is mush some days. So, and I want to talk about this too, because this is such a great statement, is what does it take to be the boss of your bottom line as an entrepreneur? Because you are all about money and finance and the independence, actually. So tell us what that means.
So when you start a business, it's important to pay attention to the numbers. There's no question about it. Yet so many people are actually afraid or anxious or overwhelmed by having to deal with that side of a venture that they really never start or never get it under control. They think that maybe it's going to happen on its own, or maybe someone else will take it off their plate or whatever. And that in and of itself kind of could create potentially a number of problems, which could lead to you closing the business and really being disappointed and feeling disappointed about, even starting on that journey to begin with.
Yes.
So what I think that the most basic and the most foundational concept when you're thinking about starting business, when you have a business idea, or if you're early into it, is to be the boss of your bottom line. And what that means to me is when it comes to money, numbers, and taxes, don't fake it till you make it. Face it
Wow.
and face it early. Because the earlier you accept the fact that you have to deal with it, the better you're going to do, the quicker you're going to get to where you want to be. It's kind of like dentists. They can fix your teeth, but they can never keep your teeth healthy. It's something that's very individual. Similarly, your business finance, your finances, your personal finances, it's only up to you, and you're the only person who is in the driver's seat.
Mm, yeah, this is such a great principle. And this is a little side note here, but how did you ever become really interested in this? I mean, as far as your education, because certain people are just led to things. I mean, I was definitely led to music. So how did you even come to this point of being interested in finance and numbers like this?
When I was in college, I knew I needed to get a bachelor's. I wanted to have an education, but when the time came to choose a major, I knew that I was going to go to law school. That was always my dream. In Belarus, I completed 2 years out of 5 of a law school. So I realized that, to get to law school and to get through law school, I needed to support myself financially. There was nobody else to support me, to help me out. So I was thinking, which major would allow me to get there? And accounting seemed appropriate because I started working as a bookkeeper. And I thought, you know what? While I get through the bachelor's and get to law school and all of that, I'll just support myself doing bookkeeping, and accounting is a great major for that. And while in accounting, I actually was quote unquote brainwashed by the professors. They said, well, if you're majoring in accounting, you might as well take the CPA exam. Wow. And I'm very fortunate that happened, because as I started learning this stuff and started preparing and worked at the same time, I actually fell in love with accounting, and I saw how powerful even something as simple as bookkeeping can be.
Uh-huh. That is so great, because it was really this little side area that it led you to your career. I love the podcast format, because we are, now in our home offices and everything. And as I'm hearing, if anyone hears a little buzzing outside, we have construction going on. So I just want to put that little disclaimer out there. This is not Tatiana having a buzz in her voice. But I love, so now everyone will listen for it. So, I love the fact that you just fell in love with it as a little side area. And this ended up being your main emphasis. And you're just helping so many people. So that is just a wonderful, wonderful thing. I love that. So that's what our lives should be all about, especially at halftime. We should be reaching out to others. And how do you help? This is a big deal here with how do you help entrepreneurs deal with the fear? There is fear of numbers, taxes, and running out of money. Because as you're running a small business, I mean, some businesses right now, as this airs and as we are recording this, have been shut down or minimized. And entrepreneur is a little bit different because you have control of your own life, but still it changes, because there are many that have been doing live events that they're not doing anymore. And there's a lot of changes that have happened to many people. And so how do you, deal with some of this fear, and especially if you have to sort of start all over the place over again, or that you're now running out of money? What do you do? So how do you deal with some of that?
I think in every crisis, and there's even something called a crisis response curve. In every crisis, it's important to understand when these different stages of shock, of desperation, of evaluation happen. And typically, when you're in shock, I mean, everybody was in shock in March when things started shutting down. Nobody knew what's happening, what's going to happen in the future. And I mean, regardless of the situation, whether it's COVID, whether it's another crisis, whether it's just a recession or whatever it may be, the most important part is always to have a plan. So I even have a little talk called how to make your business recession proof, and basically creating a plan of action, understanding your risks is probably the number one step that you would want to take going forward. However, if you are already in crisis and you are dealing with it and it was, came as a shock, which it did for many people, the next step would be to move to the stage of evaluation, evaluating your options, evaluating your assets. How much savings do you have? Do you have any retirement? The government has incorporated several benefits which allow you to borrow from your retirement and pay it back in the next 3 years, 1/3 each year. That could be an option for you if you're running out of money. They've also extended unemployment extra benefit. It's not $600 anymore, but it's $400 additional, which is still significant. That could pay the rent, that could pay the phone, that could pay for the food. There are also other options that typically varies from state to state, but that would probably be your next step to see what you're eligible for, what programs exist. Do some research. I typically post videos on YouTube as programs come out, usually federal programs, because it's very hard to cover 50 states.
Yes.
But typically I post any updates and relevant information on YouTube as kind of a recap. But just to understand that business crisis trend that starts with a shock, and when you're in the state of shock, you're still you're in action. Still kind of propels you to go downward, to keep losing money, to maybe keep losing opportunities. So the important part is to recognize it and to get through that stage of shock and desperation as quickly as you can. Then there are other strategies that are not mine, that are just out there, such as a step back method. Analyze what can you do with your business. Take a step back. I'll give you an example with a restaurant, for example. So restaurants were not allowed to have indoor dining. So taking this business and kind of breaking it apart and understanding what it means. Restaurants deliver cooked food to the table inside. So the step back would be to prepare food and deliver it to the home. If you're not allowed to do that, then what you would do is you would have cooking classes and deliver produce to your clients, and maybe do cooking classes over video with the produce that you deliver. And then this next step back would be recipes. So an approach like that is the best way to attack a situation and not let it get out of control.
Those are such great illustrations, because here in California, we are still indoor seating, as we record this at least. Indoor seating is not allowed. So, but many restaurants as well, they have pivoted and are creating outdoor seating, which is very smart, except for it's been very, very hot. So I feel very bad. They're going to have to put, some sort of misters or something, because it feels like the desert in some areas. But many restaurants have just, they're trying to survive right now. So I think, you get into that little survival mode. And this may lead to my next little question for you, because we are focusing on those 5 critical financial principles. So, and what will help dispel the fear, and you've already mentioned a couple of points, but I don't know if those are included into your 5 main critical principles. But I'd love to delve a little bit deeper in that, because when you mention shock, I think that's where a lot of people are still there. and they're still fearful, and they're going to be afraid to take the mask off. They're going to be afraid to go anywhere. They're going to be afraid to do something new. They might lose everything. And it's a scary time for many. So let's talk about those 5 areas. And then if you want to expand on those, it'd be great.
So the 5 areas are actually not the business crisis trend. It's something that's applicable to the current pandemic and what's going on in the world. But whenever you I would say that to get rid of the fear, just to kind of address your question,
Right.
to get it under control, you need to understand that it's just numbers. A lot of people, and I've heard this many times, and then my editor, when I wrote the book, he said, like, why do you keep bringing back this expression, oh, I don't want to go to jail? And I said, well, a lot of my clients tell me that. They're scared of doing something with taxes or bookkeeping and doing something wrong, going to jail. And I hear it all the time, and especially from the creative professionals, artists, and so on and so forth. And I think that that just needs to be made clear that unless you do something big deliberately, unless you launder money, millions of dollars, hundreds of thousands of dollars deliberately, and evade taxes, you will not go to jail. So if you just made a mistake, it may just cost you a little penalty and interest. But you will not go to jail for doing something wrong unknowingly.
Mm-hmm. Okay.
That is kind of the first step to attack the fear. Knowledge.
Yeah. We have gone through an audit one time, and it was when my husband and I were pretty young, married. And because I've been self-employed the entire time, and it was a scary process. I spent 2 weeks going through every single little receipt and paper. And we actually came out ahead. We were fine, but it was a scary process. And I think, you think of the IRS and what they can do to you. There is a fear there in your finances. So It's a really good point. Well, I love proactive areas. And I think when you're talking about 5 critical financial principles or items that they would be proactive for us as well. And I don't think there's any better time to be proactive than right now. Because if we can start, it's just like that dentist. So we could either let everything get really, really bad, or we can take some proactive steps, and like the dentist, let's go ahead and keep flossing. Let's go ahead and keep, our
That's right. That's
go
exactly right.
All of this. So, things aren't going to be quite as bad. And the more we put off a decayed tooth, the worse it'll get, believe me. And I've had that one done before. So let's talk about those, maybe your proactive ingredients,
strategies. Yeah, sure.
That'd be great.
So sure. So number 1 is to separate your business and personal money and matters as soon as possible. That's by far the most shocking and simple, yet at the same time simple approach that you can take to make your business, and if there's ever an audit, make that a breeze. Because just by separating, your finances, and I'll explain what that means and how it works in a second. But just separating all of that, you have a much better claim in case of an audit, because the auditor can't really tell you, oh, you've been charging a lot of personal, so I'm going to deem all of these purchases from X vendor to be personal, because you can't prove to me that it's really a business expense. So it's a sort of an audit proofing technique, although it serves other purposes as well. I mean, your tax preparation becomes also an easy task. You don't have to spend days going through your statements, highlighting your business expenses, and so on and so forth. So typically you would just pull out all the statements for the business and you're done. And the way you do it is that if you operate under an entity, a corporation, or an LLC, it makes it easy, because you just have a separate business bank account. Now, if you operate under your own name, which a lot of people still do, then I would recommend opening a second bank account under your own name and only processing business transactions through that bank account. And whenever you need money for your own personal life, you just make a simple transfer from one account to the other and you're done. Now, when credit cards are concerned, what often happens is when people start out, they invest in education or training or coaching, or maybe some equipment, a computer, or I don't know, a camera if they're a photographer, and so on. So typically it's rare that you can get a credit card that's business only. So what I usually tell people is, pick one of your cards that you don't use and designate it to be business only, so that no personal stuff goes through it, and it makes your life easy. So every time you're at a register at a store or online, you think about whether or not this expense that you're incurring right this moment is business. And if it is, you pull out a business card. If it isn't, then you pull out a personal card, and it makes it super easy, and it becomes a habit.
Mm. Yeah, you want to make it as easy as possible with your accounting. And yeah, that's a really good lesson for me, especially when you have multiple things going all at the same time. Those are great. So that's a great principle. Are there other principles here? That was separate personal and business matters. Do we have other principles adding to that now that?
Well, a part of that point, I usually kind of help business owners. I created this guide that we'll talk about later, but I created this guide to help people know where to start. And usually, as part of this first tip, I give you a kind of an idea of how to manage your expenses so that you're your accountant's favorite client, so that you can actually do your taxes on your own if that's what you're doing, so that it's actually easy for you, and at the same time you get every deduction that you're entitled to. And I just advise kind of using a spreadsheet to begin with, and using lines for income and expense categories. So we're not creating a line or an expense category for everything. So we're not going to have a Staples line item. We're not going to have a Starbucks line item. Instead, we're using aggregations of categories, so office supplies, business meals, and so on and so forth.
Yeah, that would be like your Schedule C, or whatever you have there.
Yeah,
very similar.
Absolutely.
Okay, good.
So typically, that's a really good strategy. Number 2 tip is getting your entity right, and that's something that many people dismiss and is actually critically important, because people often try to do this, DIY this process, and they Google, and there's a bunch of information, and you don't really know who's right, who's wrong. And the information sometimes is contradictory, and it makes it seem easy, and you can't really afford to pay an attorney. And then it kind of just comes out to this, I'm going to just get an LLC. From a tax perspective, LLCs are not great, because you will end up paying this additional tax, the self-employment tax, which is 15.3% for everything up until $140,000 roughly. So in addition to your federal, your state, and possibly local income tax, you will pay an additional 15% tax, which could throw you into like a 60% tax situation. Not something that you would want.
No.
So typically, if you already have an LLC, and if you're making a profit of $40,000 or more, I would say, find a tax planner who can help you convert it to an S Corp or a C Corp, depending on your situation. And it can be done retroactively as well. All accountants know how to do it retroactively, but most do. So find someone who does. And next time you're opening up a business, kind of approach the entity selection process with care, because I believe that that business is personal, which means that your situation, your family situation, your aspirations, your goals, whether or not you have a partner, whether or not you're looking for investors, all of those things influence your decision on which entity is right for you. And there are some entities that provide benefits that stretch over 5 years. So you have to have an entity for 5 years to reap the benefits of those entities. And they all come with the pros and cons. So there's no right choice. There's no cookie cutter solution for everyone. Which is why it's important to approach this. And, if you can afford to pay a tax planner to pick the right entity for you, you should do that. A lot of people skip this step and kind of get this LLC, and they have to pay the planner later thousands of dollars to actually go back and elect it retroactively, to amend returns, to get the money back, and so on. So it's just it's such an important and critical step when you're forming a business that, and a lot of people skip it.
Wow, that is really good advice. And I'm sure you were with your little your free download where you have, I think you have some more information about that. So that's very informative, especially to get the right help that you need right off. It's like having a good coach, that you,
Yep.
And it's going to save you a lot of time and a lot of money in the long run. So definitely. So, well, that was you. So that was number 2. Well, let's get to number 3, what our, of those main principles, because the first, you wanted to separate those personal and business. And the second is to get your entity right. And that was actually one of my questions. So that's perfect. So let's get to what number 3 is here on your list.
So number 3, and they don't have to be done in this specific order, but I just listed them in the most logical order that I could think of. Number 3 is running your numbers. Especially, this is true if you're just starting out. You need to understand whether the math works for your business or your business idea. Knowing your numbers ahead of time can save you a lot of disappointment and a lot of wasted money. So, it's a considerable painful process a little bit when I work with clients, we create forecast of their cash for the next 3 to 6 to 12 months. Typically, they kind of cringe at the whole process. It takes us 4 hours to do it sometimes, and depending on the complexity of the chart of accounts, so they usually cringe. But after it's done, the insight that it provides, the ability to look into the future and understand whether or not you can afford something, or you can afford to hire someone, or whether or not you need to borrow to sustain yourself. All of those insights come from this work. So I think that the easier way to attack this is to start with a 90-day forecast and make it a rolling forecast. Meaning that, let's say we're in August, let's create a forecast for September, October, November. And then once August is over, we'll remove September and we'll create December, and so on. And be as detailed as possible. And what I do recommend usually is to separate the distinct revenue streams. For example, if you are in a service business like I am, I have 3 levels of service. Actually, I don't offer the bottom level of service, which is just this once a year tax filing. But let's assume for a second that I did have the 3 packages that I used to have. I created 3 line items for each of the package so that I could see how much money each package brings me. If you in a product business, be as detailed as possible, because you want the analytics to come from your bookkeeping. You don't just do bookkeeping for the sake of doing bookkeeping.
Right.
You do bookkeeping so that you can actually derive valuable data and transform it into information that actually drives your business decisions. Similarly, expenses, I typically try to have clients plan them 3 months, at least 3 months ahead, because when they ask me, can I afford to hire this VA, or I don't know, a store manager? Well, let's take a look, and the numbers will tell us whether we can afford to hire someone. And if we cannot, let's say we see that we don't have enough cash generated, we will maybe come up with a different solution, maybe hire someone part-time.
Right.
That's power.
Yeah. Running the numbers is just really great. Well, my husband has been in finance for years as too. And we are very different. I am a creative and worked with a lot of artists, and I tell you, artists need to listen to this. So this is really, really important. And when I have to do numbers, it just makes my eyes cross sometimes. So I'm very fortunate, but it's a reality check too. So it's like, how much did you spend on that album? How much did you spend on that project? So yes. So love that. Run the numbers though. So what is number 4? If we're thinking of these 5 areas?
Number 4 is setting yourself up for a tax reduction and audit proofing yourself. What that means is really a change in mindset. And I've gone through this mindset shift 2 or 3 years ago when I got trained in proactive tax planning, I realized that tax preparation as a service, it's something that people hate getting. They need to get it because the government tells you have to file the taxes every year. They hate paying for it. They hate paying taxes. They hate thinking about it. They hate preparing to file taxes.
Right.
So there's like hate all around. So the transformation that I've experienced was looking at a tax return as an opportunity to save people money, to give them what they want as opposed to what they need. So when you're getting a tax return done, you just get what you need. You have someone prepare it and you're done. When you work with someone like a tax planner throughout the year, they will help you incorporate strategies during the year so that tax time is never a surprise. So that how much you owe is never a surprise. You always find ways to shift income or to restructure, or there are credits that most traditional accounting firms are not even aware of. I mean, I was in that bucket, 2-3 years ago. So, and it's not that it's something that everybody should know. It's just, those are the hidden, I don't want to call them loopholes because loopholes has kind of a negative, connotation to it, but they're benefits that are available to you. There are code sections that are hidden in the code so that not everybody knows them well and knows how to incorporate them well. So I have a client who had an accountant for 20 years, maybe 25 years, the same accountant. And what I did for him was like controller work. So I closed the month, closed the quarter, whatever, did reports. And he never asked me to do his taxes. And I asked him once, like, what's happening? Because we've had a really good relationship. So he said, well, listen, this guy is giving me a good deal on the tax prep fees. And I was like, fine, that's totally fine, because I know that I don't negotiate on my fees. It's the fees, whatever it is, whatever I give you is the fee. I'm not going to compete with someone on my fees. So a couple of years ago, after I was trained in tax planning, I approached him and I was like, do you want me to take a look at your situation? And he was like, sure. So I looked at it, and first of all, I found that he could have deferred about $40,000 in tax. He could have saved about 80 because some of his income was misclassified, and had someone actually looked into the character of that income, actually spent more than 5 minutes on that business, they would have seen it. Ever since, obviously he switched to his business to me. Ever since, he said, I'm never making another decision without checking with you to see if it could be deductible. So that mindset of whether or not we can make it deductible is something that people need to learn and think about. Because here's the thing. When we're in crunch time, and most accountants, I mean, I'm the, sort of one of the exceptions, but most accountants have 300 to 400 clients. And actually, I think on average, there was research done about 5 years ago. There is about 700 clients per tax preparer in the US.
Wow.
And that's only those who use a preparer. So that's not counting people who use TurboTax and whatever, and don't file. With 400 clients, even with 200 clients, nobody has extra minute to spend on thinking about how to make you pay less tax. And frankly, when we're in March, it's too late anyway.
Yes.
So if you have a traditional accountant, you have to kind of bring it up to them and look into it either before the year end, or tell them about what you were thinking of, what you read, or what you know, because nobody will put a second thought in your tax return. Because we're all kind of pressed for time, not because we're bad people. We're just all pressed for time. We're doing the best we can. Yeah. So that's number 4.
Yeah, that is very valuable. And that's one of the things I have always tried to do right. So find the right, my husband's really good at this, but we hire out. He doesn't do our taxes. And actually, we were in. He was running basically a nonprofit for a while, and had a specific tax preparer at that point too that just really knew what the code was and what to do. So it really does help. It saves a lot of money and what you can write off, because there are areas that you can write off. And one of the things that really saved me with our first audit, or us, was that, I had an instrument that I could write off, and the auditor saw it right away. He says, "Why aren't you writing off your grand piano?" "Oh, I didn't know I could do that." So the auditor actually told us that.
It was nice of him or her.
Okay, so let's get to that. Was such a great section to cover of the right sort of deductions. So we're going to get to number 5 here, where we are in all of your 5 points that you have, main suggestions for us.
Yeah. So the last one is the bookkeeping. And I mean, I'm a little biased because I started out as a bookkeeper. So I've kind of worked with a couple of businesses at the same time, all the time, and helped them with their bookkeeping. So I've gone through, bed records, quick fixes. I've gone through everything that I could possibly go through. And I became a stickler for good bookkeeping because, like I said, it could change lives, financial lives, but it could make a difference between paying a lot of tax and a little tax. If your records are in order and they're not a quick fix journal entry shenanigans happening, then you can actually grow your business by looking at your numbers. So bookkeeping, I've created a couple of milestones that could be helpful. So typically, if you're under 20 transactions a month, you should just use a spreadsheet. Don't spend time on QuickBooks or another software yet. If you're somewhere at 20 to 50 transactions a month, then you should probably get like a simple start type QuickBooks Online solution or another product. I'm personally biased because I've been working with QuickBooks, different products for 15 years. And frankly, I haven't seen a perfect product yet. So there's no perfect product, but at the same time, none of them are perfect. So QuickBooks by far is the most robust small business accounting software that you can get. And it's fairly user-friendly. So when you're 20 to 50, get a simple start, a simple version of a QuickBooks Online or another product. Then when you're getting to 50 transactions a month, you'll probably need to find a bookkeeper, and you'll definitely need a QuickBooks Online because they have a banking engine that's extremely powerful. And that banking engine makes all the difference. So I do recommend kind of getting that. Now, if you're getting to 100 transactions a month, you'll definitely need a bookkeeper, and you might want to outsource the bookkeeping in general. Although typically, because, and this is the reason, you will spend more time dealing with the bookkeeping than actually dealing with your main business. Yes. Doesn't make sense to do that. And when it comes to bookkeeping, when you're kind of early into your business, when you're doing it on your own, and some people do it on your own for years, and if you learn to do it right, you can actually save yourself a lot of money. The key is to have a routine. So when I was writing a book, we had my editor hold these 6 a.m. writing sprints. You come at 6 a.m., you write for 20 minutes, ask questions for 5, write for another 20 minutes, ask questions for 5. And from 6 a.m. to 7 a.m., you wrote a number of words, whether it's 100 or 1,200, which I usually had, and you're done for the day. Your day is free. Similarly, with bookkeeping, setting up a routine that works for you. So if you have, let's say, 20 transactions a month, maybe do it once a month. If you have 50 transactions a month, do it every week. This way you'll always have your correct balance and so on and so forth. And you'll just be in this routine that will help you kind of get it under control and not be overwhelmed and kind of get over your fear. Because when you do it often, you will see how it becomes a routine and it kind of stops being that something that you feel overwhelmed about or fearful of or whatever.
Yes, that great points. And actually that's a great way to kind of sum us up, because we've talked about, this is a great time to start a business or to regroup at the halftime of life, and to be the boss of your bottom line. You want to be under control, and you want to be able to get beyond the fear as well. So getting beyond the fear, there are these 5 steps. This is exactly what you can do, is to, separate your personal and business. You can get your entity right, which I loved how you described. That was great. Running your numbers and setting yourself up for a tax reduction. Who doesn't want that right now? And how to bookkeeping, your own bookkeeping or farming it out. That's to be able to make it easy and efficient and not take up too much of your time. So this has been wonderful. I know you have a book coming out, and you have something that you can offer our listeners, a little bit of a free download, I think. So why don't you tell us about that as we end here?
Sure. So the book that I wrote was to close the gap between people who want to start a business and really cannot afford a professional like me, but really need one the most at that point in their life. Mm-hmm. That's what the book is for. This is my expertise in an affordable, accessible format, so that you know exactly what to do when it comes to money, numbers, and taxes. Oh, the book's coming out in March of next year. It's called Dream Bold, Start Smart.
Wonderful.
So I'm excited about it. And this guide that we sort of went over, that has a little bit more detail and a link to a Google Sheet with some samples, is available at my website, talktotatiana.com. There's a form, you fill it out, and you get the link in your email. Okay. Feel free to download it and use it.
Okay, so this is Talk to Tatiana, right? All together, talktotatiana.com. Is that right?
That's correct.
Good. Right on. I love that. Make it easy. We will make sure the link is in. I usually write an article with this as well. So we'll make it easy for people to get to that. It's wonderful. So Tatiana, this has been wonderful. We just kind of kept going here, and in the midst of our little interruptions here, a couple of them with construction. Hopefully people didn't hear that too much. So in the background, if you hear a nice humming, you'll know that it's a jackhammer or something happening. So that adds to the ambiance as we are here. This has been absolutely delightful. And I think the finances are something that people are just get a little scared about, especially in the creative fields. So you have taken away some of that fear today of us just being really proactive. So I want to make sure everyone is invited back for next week. I will be talking about the lone competitor, competing against yourself, and what that means. And actually, it's a really great subject, because if you're talking to many runners, they like running all by themselves because they're going to compete against themselves, or bikers, anything like that. And business is the same way. Sometimes life is the same way. So I'm going to talk about some of those principles and how we get through that. So just again, love having Tatiana today. It was wonderful. Again, you can reach her at talktotatiana.com. That's a lot of T's in there. I got it right. That's right. And if you love this podcast, I want to encourage you, of course, to listen, subscribe, share it with your friends, and please write a review. We just love that. It's on multiple platforms, including iTunes and many others. And we have a Facebook page as well, Women at Halftime Podcast Community. And you can be a part of that. I usually do some posting in that. Sometimes I do a Facebook Live there as well. So you might want to check that out. And you can always reach me at goalsforyourlife.com, womenathalftime.com, and even djworksmusic.com. I've just upgraded that website. It has a lot of fun little things on there. So again, thank you for being with me today. And this has been delightful with Tatiana. And I look forward to seeing you next time. And so bye for now, Deborah Johnson.
Thank you for joining us on Women at Halftime. Visit goalsforyourlife.com or womenathalftime.com for many more resources, downloads, and programs, or to get in touch with me. I'd love it if you leave me a review and tell your friends. So until next time, this is Deborah Johnson signing off.